Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. If you want to read more about what John writes on a regular basis, you could head to www.incomeinvestors.com. You can find the link to the website in the description below. Beaten Down Real Estate Investment Trust, or REITs for short, got a big boost in early November after the Federal Reserve left its key interest rates unchanged and hinted rate cuts could be coming. Newly bullish REITs like Seven Hills Realty Trust, traded on NASDAQ under SEVN, got an even bigger jolt in mid-December when the Fed not only held its key lending rates again, but also signaled that multiple rate cuts could be coming in 2024. The first rate cut was expected in March, but stronger than expected economic data, including higher than expected inflation and strong U.S. retail sales, suggests that the Fed may not be announcing its first rate cut until May. The actual timing of the cuts is unknown, but we do know that rate cuts are coming in 2024, and that's helping REITs trend significantly higher. John, why is that?
Well, thanks, Mo. Well, as we've noted numerous times here at incomeinvestors.com, higher interest rates make it more expensive to borrow and pay down debt. And for REITs, it can really cut into their profit margins because REITs in general borrow a lot of money to increase their real estate holdings.
When interest rates are near zero, it can mean less money is coming in and lower profits. But higher interest rates are great for mortgage REITs in particular. And it's big news for MREITs with a lot of floating rate loans.
Yeah, even with interest rate cuts coming, the outlook for mortgage REITs or MREITs remains excellent as rates are still expected to stay above, the levels of the 2020 health crisis for years to come.
Great for Seven Hills Realty Trust and Income Hog.
Yeah, Seven Hills Realty Trust is, as you can imagine, a real estate investment trust that focuses on originating and investing in first mortgage loans secured by middle market and transitional commercial companies, or CREs, in the U.S. The company has $720 million in loan commitments with 100% invested in floating rate first mortgage loans. That means the interest rate changes throughout the life of the loan. By property type, office accounts for the majority of its portfolio at 34%. Followed by multifamily, retail, industrial, and hotel.
And let's talk numbers now. What happened in the third quarter of 2023?
Well, for the third quarter ended September 30th, Seven Hills announced that net income actually increased 44% to $7.5 million or 51 cents per share. Distributable earnings inched up to $14.64 million or 38 cents per share, while adjusted earnings came in at $5.3 million or 36 cents per share. Company also announced a quarterly distribution of 35 cents per share or $1.40 on an annual basis. And that's for a pretty big yield of 10.43%.
Has its share price done really well since November? Because we've really seen REITs catch a bid lately.
Yeah, and Seven Hills is no exception. Even though the company reported solid third quarter results on October 31st, the company's stock only really ripped considerably higher since November 1st, which is the day that the Fed announced it was holding its key interest rate steady and hinted that interest rates were coming. If you look at the company's chart on incomeinvestors.com, you can see SEVN shares have been climbing higher ever since November 1st. And as you already noted, higher interest rates make it more difficult to borrow. But with inflation cooling, the odds of the U.S. avoiding a recession, the Fed is expected to announce its first rate cut in the first half of 2024. Now, lower rates should bring in more borrowers from the sidelines, which should help juice the profits of leading MREITs like Seven Hills Realty Trust. And investors seem to agree. Seven Hills stock climbed roughly 24.18% in November and December, and a further 5.7% in 2024 year to date. It's trading at its highest levels in almost 4 years. Seven Hills stock is currently up almost 33% over the last 3 months, a little more than 34% over the last 6 months, and over 36% over the last 12 months. Despite the big gains, Wall Street remains bullish on Seven Hills, with analysts providing a 12-month median share price target of $15 per share.
John, thank you so much for your analysis. Just to recap, Seven Hills Realty Trust is a great MREIT that saw its share price take a hit during Federal Reserve's aggressive interest rate hike cycle between 2022 and 2023. But with the interest rate hike cycle likely over and cuts beginning in 2024, the macro and microeconomic outlook for SEVN and other MREITs remains solid. And it continues to actively invest its capital, closing 2 new loans during the third quarter, and remains, and management says, well positioned to capitalize on new investment opportunities and continue to deliver attractive risk-adjusted returns for our shareholders, and unquote. And all of this should help its share price and ultra high yield dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.